Geoff Lewis, global market strategist with JPMorgan Asset Management, joins us live from Hong Kong. Geoff, good morning and thank you for joining us. Geoff, Asian markets are firmly fixed in green. What is having an impact on Asian markets this Monday morning? Comments from Janet Yellen or reform details from China?
Well, I think the details of the reforms from China were a lot more concrete. They were more granular. And that reversed the disappointment over the rather vague statement that was been released immediately after the meeting. So I think there's enough details there to convince investors that, yes, this Xi Jinping administration is serious about reform and that they have mapped out a route and that they will be pursuing some of these reforms with particular energy. Although, of course, a lot of them, like land reform, like reforming local government finances, will take a number of years to sort out. They're not exactly straightforward issues, but it looks like the government does have the energy and intends to tackle them appropriately.
Geoff, Fed tapering, or rather even talk of it, has been given sleepless nights to markets globally. When do you see tapering actually coming in?
I think it's very difficult to say. I don't think it's really the key issue. What we know is if it doesn't come in December, it will come probably in January or March. It's unlikely, I think, to be delayed beyond the first quarter of next year. So there were some Fed research papers that caused quite a fuss last week. If you read through the whole 91 pages, only 3 pages are actually devoted to QE. So I think it's a mistake to think that the Yellen Fed will keep tapering on ad infinitum. I don't think that's the case. So I think that tapering is but a short number of months away, and that's what the market needs to accept.
Geoff, fair point. Tapering could be coming. We could debate on the calendar and the timeline and the quantum of tapering. But do you think this time around global financial markets are extremely well prepared to handle tapering? Just about everyone is aware that tapering will happen and financial markets are already adjusted or well adjusted.
That is an excellent point. That's been my own personal view for quite a long time. Everybody knows it's been coming. Every hedge fund that's wanted to reposition has had time to do so. So I believe that when tapering is finally announced, it will be a storm in a teacup, that there'll be nothing like the kind of repositioning of portfolios globally that we saw in after Bernanke's speech on the 22nd of May this year, and nothing like the corrections that we saw in markets from June to July. So there'll be a little bit of volatility, but I think it'll be more of a blip.
Geoff, what are you feeling about India? Because the currency, the local currency, the rupee, has been weakening a whole lot last week. And yet again, you're seeing the equity markets as well feel the heat. Do you think this volatility is here to stay?
Well, we had a very good recovery after that terrible panic over India's trade and current account deficits and the tremendous weakness in the yen in the summer months. So it's not surprising now that having got that recovery from panic out of the way, the market is ebbing a little bit, and we're seeing that, as you rightly said, on the equity and the currency fronts. There's not much of a catalyst visible domestically, but don't forget the PMIs are pointing to a synchronized global recovery. Investor risk appetite is holding up very well and could improve going into year end. So I think it'll be a case of foreign flows in international investor risk appetite, which are going to be the main drivers for the Indian market. It's not surprising it's losing a little bit of elevation at the moment.
Geoff, historically, we've always seen that if developed markets, they do well, emerging markets, they underperform. Similarly, if emerging markets, they do poorly, developed markets, they tend to do well. But currently, both developed markets and emerging markets are moving in a synchronized manner. India is sitting at a record high, and Nasdaq is also still sitting at a record high. So do you think it is time to be constructive on equities as an asset class rather than choosing between EM or DM?
That has been pretty much the message we've been giving to our clients all of this year. Don't take big geographic bets. It's pretty difficult to determine where those big regional bets should go, but be very overweight equities in this environment where we're moving away from the problems created by the financial crisis. We're moving towards a normalization, I think, in terms of the underlying economic cycle, and where we're looking for a significant pickup in global growth next year, spread pretty evenly across the regions. So from that point of view, it's a good idea to be overweight equities as an asset class, but don't try and concentrate your bets.
Is it too late for a fresh buyer to revisit equities as an asset class, or currently equities clearly offer still pockets of deep value?
I think if you look at areas like the emerging markets, they are still on particularly attractive valuations. They have lagged behind the other markets year to date. So it's probably a good time to if you have been very overweight U.S. equities or continental Europe, probably moving some money away from those regions back into emerging markets, which have been out of favor for much of this year.
Geoff, really good chatting with you. Appreciate you taking the time out and speaking with us this morning.